Okay, can we start, ladies and gentlemen? It's the meeting of the Accounts and Audit Committee, 6th of February. Can I first mention attendances? We've had apologies from Councillor Boys, I think. Apart from that, I think we're all present. I will just mention before we start, this is all being videoed on YouTube. I think you all know that. And we have to use our microphones, otherwise nobody will hear us. So turn your microphone on when you're going to speak, but remember to turn it off when you've spoken. Otherwise, the general public will hear everything you want to say, and you may not wish that. So, well, you've got to be careful. So, item 2 is questions from members of the public. There haven't been any as of 4 o'clock last night, Joe, I understand. So, no questions. Item 3 is minutes of the last meeting, which is 31st of October. Can we take those as read and agreed? Thank you. Item 4 is the appointment of an independent member of the committee. Now, those of you who are observant will have noticed that there's a stranger amongst us, to some of us. We did have, I think, 5 applicants. Councillor Mitchell and Councillor Patel and myself interviewed 3, and we appointed Miss Jeannie Platt there. Unfortunately, because the council meeting last Wednesday was cancelled, we couldn't formally appoint Jeannie at that time, but she's kindly come to watch how we do things this evening, and she'll be formally appointed hopefully at the next council meeting. Then she'll be a full member of the committee. So I think perhaps if we go around and say who we all are, Jeannie, that might be helpful. And there won't be any questions afterwards, but just to be clear, I'll start. You know, I'm Councillor Brothers, and I'm chair of the committee. Sorry.
I'm Councillor Liz Patel. I'm vice chair of this committee. Welcome, Jeannie.
I'm Councillor Jane Dillon. I'm Councillor Jane Slater. Welcome.
Councillor Alan Mitchell. Welcome.
Joe Maloney, Democratic and Scrutiny Officer. I provide support to the committee and the first point of contact. If there's anything you want or need, just let me know.
I'm Graham Bentley. I'm Head of Financial Management.
I'm Karen Murray. I'm Director at Mazars, the Council's External Auditor.
And I'm Tommy Rooney. I'm the Manager from Mazars.
And Mark Foster, Audit and Assurance Manager.
All right.
Sorry.
I'm Councillor Lally. I represent Flixton.
Thanks for that. We're going to item 5. This is one of your, Karen, are you doing this one?
Yeah, I'll take this one if I may, Chair.
Yeah.
Our Audit Strategy Memorandum is the document that you will previously have known as the Audit Plan. It's a fairly long report because professional standards require us to report a lot of information to you at this stage in the audit. So whilst I apologise for that, I will take most of the report as read and just pull out a few very key points. The first one being, of course, that this covers the 2 opinions that we give, if you like, that's on the accounts and also the value for money conclusion. You will see in section 3 on page 10 of your papers some background to our audit approach, and you will see a pie chart that sets out the stages of the audit. As you would expect me to say, really, at this stage in the year, we are all on track to deliver everything that you will need by the end of July, and that timing hasn't changed and is in hand. Page 11 refers to the areas of the council's accounts where management will rely on decisions and information provided by experts. So we've just set out for you there the experts who contribute to the council's accounts process. On page 12, there is some information that members may be interested in relating to the fact that you prepare group accounts for Trafford Leisure Community Interest Company, who are consolidated into your accounts at the end. This just confirms that we take a fairly light touch in terms of the consolidation process that you go through, primarily because it is such a small part of your overall business. And you will see when we come on to materiality that it doesn't alter the materiality calculation very much at all, representing, or reflecting that relatively small size. The other thing just to mention is that your officers are working through the implications of accounting for the new JV, Trafford Bruntwood LLP, which is working with you on the care site, and it is possible that you may need to consolidate that. It will depend on the scale of transactions by the end of the year, and that's still work in progress. I mentioned materiality, which is set out for you on page 13 of your papers in section 4 of our report. Materiality is an important concept for us because we don't look at every single transaction in the accounts and therefore would never be able to give you assurance that the accounts are absolutely right. The reason for that, of course, is it's a very expensive job if you want somebody to check every single transaction, and it will be neither proportionate nor necessary. So we work to a materiality level that's around the risk of error that we can tolerate before your accounts would become so wrong as to be misleading to someone who wanted to rely on them. We base our materiality calculation on a percentage of your spend that's set at 1.75%, which gives us a materiality figure of around £9 million. It's slightly less than that for the council and slightly more for the group. But if you keep the 9 million in your head as the round number, that's round about where it'll be. That sounds like a lot of money, but it's important to remember the context and the size of the council. And it's also worth me drawing to your attention the information on page 14, which is about those areas of the accounts where we apply a different level of materiality. So you'll be pleased to know that when it comes to looking at things like senior officer remuneration, we don't make sure it's right to the nearest 9 million. We make sure it's right to a much lower figure, as you would expect us to do. And that reflects the fact that there's an awful lot of interest, if you like, in salary disclosures, and therefore it's appropriate that we focus more work there. Having said all of that about materiality, we will report all of the errors to you that are above what we call our trivial level. Our trivial level is set at about £270,000, and again, a little bit up for the group and down for the council from there. But the idea there is that you will get to make the final decision on whether or not errors that management don't want to amend for should be amended, and you will be used to that process. That's what you'll see in the audit completion report from us. Section 5 of the plan is really, I suppose, the meat of the work that we plan to do, because it's about the risks that we've identified. I'm not going to talk through each one, but what we do here is we set out for you the risk and why it's a risk and the work we plan to do to address it. And when we come back in July, we'll tell you what we did do and the assurance that we got. So that's sort of triangulates that for you. I think the important thing to say on the risks is that the first couple around the management override of control and revenue recognition are risks that apply to every organisation and therefore appear in every audit plan. They're not specific to you here in Trafford, and you don't need to be particularly concerned about them. The other areas, property, plant and equipment and pension liability, are risk areas because they are very big numbers where you are relying on experts and where small differences in the assumptions and the judgments that are made can lead to very big changes in the numbers. If I give you an example around property, plant and equipment that might make sense, you have an awful lot of land and buildings that you need to get valued. And as you will know from your personal experience, if you get 3 estate agents in to value your own house, they'll come up with 3 different prices. And actually it's worth what somebody will pay for it. So that's what I mean when I say there's an element of judgment in this, and we look at how that's been applied. You will see also that we've identified an enhanced risk around the way in which you value your airport shares. That's not an enhanced risk because we are particularly concerned about it. It's an enhanced risk because we need to do a little bit more work to understand your process and judgments and the way in which you rely on experts to provide you with information to do that. You've not changed your arrangements from previous years, and therefore I don't anticipate any problem, but it is an area that we do need to do some work on.
Yeah, I mean, obviously, that is. I understand what you're saying with that particular section, but that the value of those shares did fluctuate, not in keeping with the forecasts over the last couple of years. Am I right, Graham?
In the last couple of years,
we got returned a lot more than we anticipated, didn't we?
Yeah, I can't tell you the exact figures, but we have seen it. It has. I would say it's like lift off, but it has gone up.
So what you're summarising there is that you're not specifically looking at the amount, or you're looking more like the process, aren't you?
So in order to be satisfied that the amount that you reflect in your accounts is reasonable, we look at the process that you've gone through to get to that number. What you do as a collective group of authorities is commission an external valuation, which is done for you by BDO. It's in the report as under the expert section. It's done for you by BDO. They will tell you what they think it's worth based on a whole host of data, if you like, including comparisons with other airports and so on. I will look at the instruction that they were given, I will look at the information that comes back, and I will ask a member of my valuation team to confirm that the way in which BDO have applied the assumptions and come up with that figure is reasonable. Did they?
I don't think it was wrong, was it? I think it was just that we got the dividend has been a lot more the last couple of years. So it's whatever you were projecting, it's been better. So it's not wrong, is it?
The valuation's just based, I think, obviously, based on performance. I'm comfortable in the valuation they've given, and it has gone up. To mirror that increase, the council has seen an increase in dividend payments. And obviously that's something that, in terms of the council and the way we budget for those, we budget cautiously. We don't want to preempt dividends that don't come forward purely because of the values we're talking about. So there has been a slight mismatch in what we've got, and I will refer to that when I give an update on the P8 revenue monitor.
I just wanted to go back a page. You know, you're talking about the valuation of defined benefit pension liability. What is it that you're going to be actually looking at there? Because I know that the GMPF is one of the best performing pension funds within the country. So I was just wondering what you're looking at.
So important to make a distinction between what the pension fund does with the money that it gets and the figures that you need to account for. So you need to account for the pensions that will be paid to people who have accrued pension entitlement whilst they work for you. And that is information that's provided to you by the actuary based on information that flows through the fund. So there is a complex process, but ultimately you're relying on the actuary's assessment of what your liability will be. And of course, it's a future liability as well. Now, there are some complex accounting adjustments that mean it doesn't impact on the taxpayer, but nevertheless, you show the full future liability in your balance sheet based on that actuarial assessment. So we look at the information that's provided to the actuary and what comes back and make sure that that makes sense. And we also commission an expert through the National Audit Office on a national contract to have a look at the actuary and the actuary's processes to make sure that we can rely on them as your expert, if you like, as management's expert.
And as you do that work, you're going to be sharing that with us, because obviously the GMPF, the LGPS is a contributory based pension scheme. So it's not like other public sector pensions. So as we're going through that, will you be sharing more detail about what you're actually looking at and what the findings are?
Not specifically, because I'm auditing the figures that appear in your accounts as the pension liability that you as a council have. What you do get from your actuary, though, every 3 or 5 years is a full revaluation to work out what your contribution rate should be. And that takes into account, obviously, the future entitlement and the decisions that you've already made. And that might change people's benefits going back and forth. And then the pension fund itself is separately audited as well, as it happens by me, but it could have been somebody else. So they will have their audit certificate as well, which looks at what they're doing almost on the other side, if you like, because they're looking at both the investments and the liabilities.
Can I just add there that obviously in terms of what the council contributes by way of payments to the pension fund, that's determined by the actuarial assessment done every 3 years. 1920 will be the 3rd year from the last assessment. So during 1920, we'll see an updated assessment as to what the next 3 years from 2021 and what contributions the council will have to make from 2021 onwards.
The actuaries for the actual pension fund are remarkably prudent in their approaches to their taking of those numbers, and they have about an 18-year horizon to readjust any problems which temporarily happen to the fund numbers. I just say this because I'm on the panel for the pension fund, and it is a matter of great interest to all of the members. So, yeah, thank you.
My colleagues from Unison run it also, and I am a pension fund contributor. Perhaps I should have declared an interest.
I think the issue to bear in mind with the pension fund is that there are two completely separate things, if you like. There is your liability and then there is the performance of the fund, which, whilst it is relevant to your to where your liability sits at any point in time, it is not. It is out with your control to some extent, as councillors here. Just picking up then the final section of this report, it covers the VFM conclusion. Now, just to remind members, although I'm sure you've heard auditors say this for many years, the VFM conclusion is a very high-level assessment that looks at whether or not the council has proper arrangements in place for its decision-making to secure sustainable outcomes for local people and taxpayers. There is no change to the criteria that we use to assess that and the risks that we have identified, which is because we don't have enough information at this stage about your arrangements and how robust they are, relate to your financial pressures and the work you need to do as a council to deliver your financial position and your savings plans going forwards, to your investment strategy, because we need to make sure we understand and are comfortable with your governance arrangements that you've got in place, which is not to say that we don't think you have the right arrangements. We just need to satisfy ourselves that that is the case. And then the last one is how you're working with partners to deliver outcomes, and in particular, how you're working through the health and social care integration and the agenda there. We will provide you with a very high-level summary of the work that we do on that when we come back in July, but at this stage, I'm not saying that there is a risk to your outcomes. I'm saying that I don't have a clear understanding of your processes, and that's work that we'll do during the year. That's the same process that auditors go through every year. The rest of the audit strategy memorandum contains the information that we're required to give you at this stage around the fees, the independence, and so on. I wasn't going to draw any attention to that now, but I'm happy to take any questions if there are any on that or anything else in the report.
Thanks very much. Any questions?
I've got a devil's advocate one for the officers in regards to massage. Excuse me, onto the other. Both Mark and Graham, maybe if you want to comment on this. I like this report and the way that it's sort of quite nice and presented and concise. Is there a huge difference now that we've sort of fully transitioned over from the previous auditor on sort of what the process that Mazars have identified and previous auditors have done for us?
I'm not significantly aware that there's major changes. I think some of the issues that we need to address as an authority is certainly changing. But in terms of the scope of the audit and everything else, I think it's pretty much on a par with where we've been previously.
Anybody else?
But it's just to say thank you for providing more clarity around the materiality, and misstatements section. That was something I'd highlighted. Those figures to a layperson are quite significant. So, yeah, thank you for that clarity around that.
Yeah, could I just say as well, I'd highlighted that as well. I think the presentation was very good, and it throws a lot of light on the actual report. For those of us who are not accountants, which is most of us here, I think there are exceptions, a lot of the reports, not just yours, but the internal reports as well, are very technical. We find it quite difficult to understand, really. So I know technicality is bound to occur because it's the language of accountants and some of it's statutory requirement as well. But I just wonder whether the sort of thing you've just said, whether you could in future put that in either in writing or in some of the forms so that we can get a better grasp of material is an example, really. We'd all, I think, comment on what does that mean, really. We've got an idea what it means, but you explain it very well. I just wonder whether in future, I'm not just looking at Mazars, I'm looking at internally as well, whether we could ask people to try and write the reports as far as they can in language, or perhaps with more explanatory language, so that those of us who aren't trained accountants, who haven't spent 20 years doing it, can have a better grasp of what to ask. It may save time in the meeting because we wouldn't have to ask so many questions then. Go on to item 6, is it?
Yeah, thanks, Chair. I'll take this one if that's okay. And I won't spend too long on it because Karen's giving you the main messages about the audit and the audit plan presentation she's just done. But if I can refer you to page 27 of your pack, We summarised there the progress of the audit, and there aren't any significant issues to report from the meetings we've had so far with officers where we've discussed issues and risks, and also from the completion of our initial on-site work, which we set out in the diagram below on that page, which replicates the diagram that you've seen in the audit plan. But following that work, that basically led to the production of that audit strategy memorandum, the audit plan that Karen's just presented. We're actually back on site this week now, and that's to complete some early testing work, basically to reduce the amount of work that we need to do on the accounts in June and July, and to look at some of those significant risk areas that Karen mentioned, so that we can get some early review of those processes and figures that are going to feed into the accounts. Officers from finance also attended a final accounts workshop that we ran this week, where we discussed technical developments and issues. And again, we'll be following up those things with finance staff, just to basically address any issues or concerns that may arise from that, and to get an early review of anything that falls out of that process. From page 28 of your pack, we provided some summaries on national publications that we hope you found useful and interesting. I don't intend on going through those individually, Chair, just hope you find them useful. But I would just mention that at the end of January, we sent you what we hope you find a useful document, a horizon scanning document. You may not have had a chance to look at it yet, but we hope that provides some useful information to feed into discussions with internal audit about their plan for 1920, because it covers some key issues and risks that you should be aware of, and you're probably already familiar with in the local government sector.
Thanks, Tommy. Yeah, thanks for the copy of the horizon scanning. I meant to circulate it to members, but due to the problems I had with the council's IT system, I couldn't do that. But we've talked about it this evening, so we'll make some arrangements so that members could access it via the miracle of the council's IT without me having to email it. Because it is very useful, and there's a lot of information on there, background information about the bigger picture. Obviously, as the name suggests, looking forward. So I'll make sure people can get access to that, because it is very useful. Thanks. Any other questions for anybody? No? On to item 7.
I'll take item 7, Chair. What this is just a note on the outcome of the housing benefit subsidy audit. And I think it's not the first time we've had a certification issue, a qualification in respect of a particular aspect of how we've reported and classified overpayments on the form. I think it's worthy just to give it a little bit of explanation. I think in terms of overpayments, there are 2 classification fields for overpayments. One's claimant error, and the other one is local authority error. And in the sampling for the claimant errors, there was identified that there was a requirement for a bigger sample of 40 cases that identified a small proportion of errors. I think where we're at in terms of this is the quality assurance measures have been brought in by Exchequer Services during 2017-18. And compared to where we were as an authority, the position's better. In terms of risk, there's none at the moment because of this decision, because in terms of the overpayments that were classed as claimant error, the potential amount that would have been in error would have just had to have gone into the local authority error box. So it's just actually a need to reclassify. In terms of local authority error, the council's got a threshold, so it is allowed to make errors, but it is restricted. There's in terms of the overall claim, which is worth about 56 million, there's a threshold of local authority error, the tolerance of 0.5%. It's about 250,000. So even taking account of this, had to move things into this local authority error box, it wouldn't have. We were nowhere near breaching that threshold. Needless to say, we have brought in quality assurance measures, and we would hope that during 18-19 we're in a better position than we were in 17-18. So hopefully it gives a bit of comfort in terms of where we're progressing.
Thanks, Greg. One of our questions was what exactly, approximately, was there in the bearing in mind it's 56 million budget, but what sort of numbers are we talking about?
I think it says at the bottom of the note that of the 40 cases sampled, 4 cases valued at £128. So 10% of those cases sampled were wrong. What we don't know is the value of those 40 cases and what 128% as a proportion of value means, but it wouldn't have been significant to cause that local authority error cell to come under pressure in terms of the 0.5% allowance that we've got.
So all we know really is it's less than the £250,000 or whatever. It is.
Certainly, yeah.
Okay, anybody else? No? Thanks very much, Graham. I think item 8 is you as well. Treasury management strategy.
I'll certainly take that. I think, again, apologies, this is a long report. It's a technical report. But these are the reports that come under quite a degree of scrutiny, particularly in the last 12 months as authorities have embarked on different types of investment strategy. What the Treasury strategy does is basically, it's part of our suite of budget reports that will go to council in later on this month on the 20th of February. It comes to audit committee every year. It comes first, so audit committee can scrutinise, then make those recommendations to council if it's in agreement with the report. There's certain things in the report that in effect need approving by council, and those are set out in the recommendations around the debt strategy, the investment strategy and the prudential indicators. Just to take each one in turn, the debt strategy, to put it into context, the council has got, I think the figure's just less, at the moment, just less than £200 million worth of debt. So in terms of putting that into context, the reason we've got debt is basically to finance items that are in our capital programme. So our capital programme will have funding from other sources like capital receipts and grants, but that element of the programme, it isn't funded by external resources or capital receipts, is what we will borrow for. And each year we set our borrowing requirements up in line with the prudential code that is set by SIPFA. So what the prudential code states is that our borrowing strategy will be based on what we need to fund our capital programme with. It must be prudent and it must be sustainable. In terms of borrowing, I'm not aware that in the last, going back a good number of it, we've never increased council tax requirement because of borrowing for the capital programme. What I mean by that is that any decision to borrow will be a decision based on the fact that we can generate income streams or we can save money to pay for those borrowing costs. So 2 examples in terms of saving money recently, last 2 or 3 years, was about the street lighting, the change to LED, saved money, and some of that saving was used to pay borrowing costs. More recently, a good chunk of the new borrowing we're taking on is around our asset investment strategy and our look to buying commercial properties. They generate income streams, and those income streams must be sufficient to repay our debt costs. So we do take on debt, but we don't, in effect, burden the revenue budget. Just moving on to the Appendix 3 within the report. Appendix 3, in terms of the borrowing strategy, sets 2 limits that the council must approve. The first one is called the authorised borrowing level. And what this sets is, in effect, a restriction, a cap on the overall level of borrowing of the council. It is set quite high, and the reason for that significant value for 1920 at 585.5 million is because of the investment strategy. And there will be proposals in the budget report to expand on the fund that's been created for the investment strategy, to move that from 300 million to 400 million, just to give scope if the opportunities arise. The operational boundary is in effect what I would call a more day-to-day level. That's what we would try to retain our borrowing within, the operational level, slightly lower than the authorised level, but it's more of a working requirement and an operational one that we'll aim to work within. Just moving through the report, the section on minimum revenue provision in section 4, just to explain what that is in layman's terms, that when we borrow money, we must make provision to repay debt. And the minimum revenue provision policy states that depending what we've borrowed the money for depends on how we repay that debt. And again, in Appendix 3, there is a list of scenarios and different repayment terms. So I was working through, this is my budget pack I'm looking at, but I've put notes on this. So in general terms, if it's borrowing to support just new capital investment in our assets, we will tend to set aside money from our revenue account to repay debt over 50 years. Similarly, if we buy commercial property, we will repay debt over 50 years. In terms of things like third-party loans and loans to third parties, because part of our asset investment strategy is around providing senior debt to developers. If there's strong evidence that that money will be repaid, and for example, we've also got debt with the cricket club, and there's obviously guarantees to repay the money. If we know that's going to be repaid, we will not set aside MRP, because we know we're going to get repaid in 2, 3, 4 years down the line. So why set aside money when we know we're going to get it repaid? In terms of our investment strategy, section 5 of the report details the requirements through which we invest our money. Now, again, just to qualify that, investment strategies are terms now that are quite broad. We've got the general treasury management investments, which is investments of our surplus cash. The opposite side, the opposite investment strategy, the asset investment strategy, is around buying commercial property. This report is particularly around the treasury management, the investing of the day-to-day cash. And we do that, and I think I've said at previous meetings, in terms of we make sure what we invest in is secure. We're concerned about liquidity, that we've got enough cash to pay our creditors when they fall due. The last thing we look at is yield. We're not chasing returns on our cash. We're just looking for safe havens. And within the Appendix 3 and also Appendix 5 are a list of criteria such that we only invest in institutions that have got strong credit ratings, and also we set limits in terms of how much we can invest with certain institutions, and also countries. So other than that, Chair, I think I'll hand over to you. If there's any questions, I'll be glad to take them.
Thanks, Graham. Any questions? I suspect you're baffled as
I was just looking through just to see if there's been any significant changes. I mean, obviously, like you say, it's quite a long report, isn't it? But has there been any? I mean, I noticed there's comments about the US economy and stuff like that, and Chinese economy. I mean, has there been any significant changes in AAA ratings, AA ratings that we've got investment in?
Not that we've noticed. The only thing I didn't pick up on, and it was relevant to the committee at the audit period, was that we've repaid the inverse lowball loan that we held with the RBS, which was a £20 million loan, but at the final account stage, it was quite under the microscope in terms of how authorities should account for them. So it did delay the audit opinion, but we've obviously subsequently repaid that, and we've repaid that in effect to we've made profit to the revenue budget because we've secured lower rate debt.
Councillor Patel.
Thank you. I mean, it is very technical report. Is there any possibility of providing, these are public documents, and I realise you've got to get across what have to get across some more accessible executive summary or a clearer explanation of the terms involved. Just a question on the Mazars report. They've highlighted helpfully the national publications that are relevant. CIFA statement expressing concerns with council's funding commercial investment through borrowing. I'm just wondering whether Trafford has reviewed that statement or whether it bears any relevance to the Treasury Management report. Thank you.
It does bear relevance to the overall investments that the authorities make. Obviously, this report specifically is around Treasury investments on a day-to-day basis using our surplus cash. The reports that have come out have tried to restrict what authorities do in terms of their approach to what I will call the asset investment strategy. And they use a term called borrowing in advance of need, which basically precludes an authority for borrowing for just an income return. So if we cite the example of buying a hotel in Edinburgh, that is in effect within the regulations that are now coming out that you can't do that. Some authorities have approached the investment strategy quite bullish, quite small authorities, and what the guidance also tries to do is make sure that what returns you do get from investment strategy is proportionate to your overall size of budget. Because what you don't want to get to is, in terms of the income streams that you're getting, is too reliant on those income streams, particularly if you've got a reliance to pay for social care services, paying for debt repayments that you've inevitably got, you've got to make sure that's proportional. And so that's what the guidance in terms of borrowing and advance of need, restrictions on that and proportionality. And yeah, the authorities minded that any propositions it will look at must have a regeneration bias, be in the area, be in the Greater Manchester conurbation, not beyond that.
Thanks. I was going to mention Lobo, but you've clarified that. Could I just mention below Lobo on 3.3, it talks about this 0.6 million loan debt administered by Tameside. What was the background to that?
The Tameside debt, and I don't know the specific details, but they were the administrative body for, they called it residual body debt from the old Greater Manchester Corporation, I think. So they were like the lead authority in AGMA that administered this remnant of debt that came from the old Greater Manchester Authority. So as a district, obviously we've got a part share liability of that.
Can we just move recommendations on the front page there before I forget? Thank you. I'm going to item 9, is it? Item 9, is that you, Mark?
Thanks, Chair. So I'm presenting this report on behalf of the Head of Governance who produced it. And it sets out the planned approach for the year for producing the 18-19 annual governance statement. Includes the proposed timetable for its production. Just as a quick reminder, the annual governance statement is produced each year, a statutory document required following the Accounts and Audit Regulations 2015, and it accompanies the Council's annual accounts. So the time frame for producing it is similar to the accounts. So the regulations require that the Council reviews annually its governance arrangements and reports that in what's known as the AGS, the Annual Governance Statement. So the report provides some background to the process and the sort of areas that are covered within it. Now, the report is from the Head of Governance because Legal and Democratic Services provide a lead in collating the document. But it's drawn on assurances and information from across the council, managers across the council, and other departments, including internal audit and the work of audit. In terms of Audit's role, we will provide some check in terms of the draft annual governance statement and provide feedback to Legal Democratic Services on that. But information in the statement will be gathered from across the council, for the likes of performance management, risk management issues, general governance issues, financial management. In terms of also, it has a number of development actions within the document. So the council sets out what areas for improvement it considers for the year ahead. So in the 18-19 governance statement, it will provide an update as well on actions we said last year we were looking to make developments on. So in terms of the timing, the final report needs to be approved by July, the end of July, in line with the accounts timing, and that's to be signed off by the chief exec and leader. A draft version is required to be produced by the end of May, and this committee will have an opportunity at its first available meeting after then to be able to comment on the draft version. And as well as being a statutory document, it does provide a useful role in highlighting areas for potential strengths or potential improvements in governance arrangements. So you see on page 72, it summarises there the timetable for its sign off. So just really asking the committee to note the timetable and that it will have input to the draft version of the document.
Thanks, Mark. Any comments from anybody? Can we note the recommendations then and note the timetable? Thanks very much. On to item 10. You again, Mark, I think.
Again, yeah. So this is a further update on the work of internal audit. The last committee meeting, I gave you an update from work we carried out between April and August in the first part of the year. So this latest update covers September up to the end of December. So there's a summary in terms of section 3 on page 78, just setting out our main areas of focus over those 4 months. And you can see in section 4, there's just a little summary in terms of the number of reports we've produced. So there were 12 reports that reached final stage. And of those, 10 of the reports, if you look at the range of opinion levels we have in the appendix of the report, 10 of those were deemed to be medium, adequate, or above opinions. So overall, a positive outcome in the period. There's a summary there in section 5, page 79. It starts of the reports that we did issue during the period. You'll see there's a range of audits covered, covering like financial systems, procurement-based work, IT work, and also some service or authority-wide audits, and areas of strategic risk, and individual establishments such as schools, for instance. Just point out the terms of the 2 reviews where a less than adequate opinion was given. One of those we gave a low medium in relation to the council's business continuity arrangements. That does actually link in also with the annual governance statement, because that is an action within that as well. So you would see in the forthcoming 18-19 AGS some update on progress around that. So we basically identified there's a number of areas, both council-wide and with individual services and IT, where arrangements for ensuring the event of disruption, there are robust plans in place to deal with that. And including testing of having those plans, but testing them as well. So there's an action plan been generated around that.
Quite relevant, really, would you agree? With the snow debacle?
I suppose it's to cover eventualities, maybe small ones, and also ones where, for instance, for over a period of days, a service could stop it. I suppose it's to cater for lots of different scenarios, really. Yeah. The other audit where there were aspects of it less than adequate was conducted by our colleagues at Stockport Council, the audit section there. with us being partners within the STAR procurement arrangement. And that was around the contract procedure rules that each authority has. And there were areas for improvement they identified there, in particular around training, guidance, awareness raising of contract procedure rules, and sort of formal monitoring to make sure that procedures across the councils are being adequately monitored. Now, STAR, again, are producing an action plan around that. And we do have an update from STAR on the work over the last year at the next audit committee meeting in March. So if we could then just draw your attention to section 6 on page 81. I'd just make brief reference there to other assurance work that we've undertaken during the period. We've continued to provide support around the strategic risk register update. So it came to the committee at the last meeting, and you'll get another update at the March committee. We've conducted a number of checks of grant claims where internal audit sign-off was required. We've also coordinated the National Fraud Initiative exercise, and you see a little bit of detail on that in Appendix 3 on page 89, where we've worked with other services to gather information and data that we can submit to the Cabinet Office, and they use that to generate data matches. So really a whole set of queries that then the council can follow up to see, is there an issue, or is, there may not be an issue in the majority of cases. But different teams, and particularly the counter fraud team, David Wright will provide an update to the committee later in the year on his work. But we liaise with other services to make sure they have that information to follow up any queries. So the committee will get an update later in the year on work around that. Other work included some work around monitoring of mobile phone usage across the council, and we liaise with IT to sort of make sure suitable contracts are in place for individuals based on usage. We also did some advisory work with Trafford Leisure. We looked at Altrincham Golf Course, provided some advice on controls there. And also around the One Trafford partnership, we worked with management in terms of looking at the performance indicators in terms of the information that's provided from Amy, and we've provided some support to management in that. But those are areas where formal reports haven't been issued, but work's been completed. Just moving on to section 7.
Can I just pick up something
Yeah.
there? Obviously the comment that Councillor Lally made around the disaster recovery around the snow issues. Obviously that I think referring to uncollected bins and stuff that we suffered over that week. So what contingencies are in place to speak to Amy around that?
Well, based on our review, we looked at sort of corporate processes in general. So we didn't cover individual services, but we looked at what approach is in place. So there's, for instance, each service they're looking to complete, there's like a template to set out what their business is, what their requirements are, how quickly they need to be back in operation, and what are the various priorities. And where our review came from, well, there was a need to make sure all these respective plans were kept up to date. So we didn't focus specifically on Amy as such in that respect. It was more from the whole corporate approach. So that would be one example, I suppose, where there would be particular plans in place and priorities, etc. So just in terms of the annual governance statement as well, there would be an expectation that there's an update around the whole idea of business continuity as part of that as well. The committee should receive an update on. Go on. Sorry, yeah.
As elected members, I think that over the last couple of weeks, those have been the concerns that residents have raised with us. So I think it would be really helpful if there was if we'd have had a sight of something prior to this happening, that this is what will happen if we have a bad winter like we have pretty much every year around this time. This is Amy's disaster recovery plan if the bins and stuff aren't collected, so that we can speak to our ward residents, and because it has caused quite a few issues it's increased, contact with residents around just that one issue. And it's, we should have been able to say to people, no, this is what will happen, the bins will be collected a week later or whatever it was going to be, and we didn't have that information. And I think that should be something that we had. And I think that, we need to be speaking to Amy about what their disaster recovery process is in situations like that.
Okay, thanks. Yeah, I'll feed that on.
Yeah, just following on from that, I mean, so many of the council services are outsourced nowadays. It's not just Amy, it's other things as well. But do you look at that? Because it's not like it was in the old days. It's all the council. Most of it is not the council, is it? We've limited control over what outsiders do, really. But do we, like Councillor Slater says, do we investigate what they're going to do, and do they tell us? Obviously, in this case, they didn't. But do they tell us, or should they be telling us, what their plans are? It's not just Amy, but other people we outsource things to.
Yeah, I think in terms of audit work, we'd look at sort of, I suppose, both parties' roles and what the agreement would be between us in terms of monitoring and the provider. But yeah, in terms of that point, I'll feed that back.
Thanks, Councillor Brotherton. Yeah, I mean, obviously we're highlighting bins because it's all relevant in our minds recently. But this report's basically highlighting, although it's a low to medium issue, that there needs to be some sort of work carried out just to sort of bring it up to sort of a standard. And I know we've highlighted Amy because Amy's the one that everybody goes on about, but obviously in the process of any third party or contractor, are you saying that we need to sort of perhaps review that and improve that protocol so that it's one of the things that we establish first and foremost, so that as my colleague said there, that the residents are informed in a timely manner if something happens?
Yeah, I think we're talking, partly arrangements where there are other providers and suppliers, contractors involved, but also situations where there's in-house arrangements. So whatever the scenario is, the principle with our piece of work was along the lines of making sure there's, like an annual process as a minimum in terms of fully refreshing your plans, obviously updating them as an ongoing issue, but making sure the right departments are aware of the interlinkages. So, for instance, IT, if there are systems issues, IT needs to be aware that some system has to be up and running again within such a time. So it's those sort of coordination issues. So it would impact, yes, on arrangements like Amy, but also we're talking generally across the council with all services.
The IT system goes down, we're sort of running around sort of thinking, no communication on either side, for example. And
I would say as well, we'll follow up the piece of work as well to each of the recommendations and be able to report back as part of the 1920 audit plan. We'll do further work on that.
And just make one further point. I think that it would be helpful if the risk register came to every audit committee so we can see where we're up to, so that we can make sure that we're monitoring against it and we see where. No, it's not come to this one, has it? It was at the last one. He said he's going to bring it to the next one. So that'd be really helpful. Thanks.
Yeah, the current process in terms of the work plan is it's come to the October one and the March one. So I think it would just the report always gets reviewed and it's owned in effect by CLT in terms of the risk register. So it's something we can raise with CLT in terms of future timings and updates around it.
Okay, can we just note that that report and go on to item 11? It's you again, Mark. Budget monitoring.
It's mine, is
this? Oh, great.
Chair. Yeah, this is the period 8 budget monitor, which got presented to our executive meeting on the 28th of January. We report bi-monthly to the executive. The position since period 6 has improved. Paragraph 2 gives an update in terms of the movement of £750,000 favourable since the last monitor position. So overall, our net revenue outturn variance is a surplus of £28,000. I think it's just worth looking at the table just under paragraph 3, table 1, and just talking about some of the issues that we're facing as an authority, which I think will be useful for you to understand. Directorate budgets continue to put pressure on our financial position and are projected to overspend by about £1.8 million. The big pressures there is obviously across children's and adult social care. Period 8 saw a slight flatlining in terms of the pressures being faced on children's placement costs. But what we did see was rising costs associated with adult care packages, and the push to improve delayed discharges from the acute sector also put pressure on our costs to the tune of about £500,000. So overall, service expenditure, and this is something we've been challenged with when setting the 1920 budget, is something that we've had to look closely at and make sure that we've built enough into the budget to cover where these pressures seem to be heading. Unfortunately, as an authority, where we seem to be at the moment is the slight uncertainty with resources going forward, and the fact that resources we do get tend to be one-off in nature. So the sustainability of the resources we're seeing from government just tend to be just for 1 year only. So in terms of stability, it's difficult at the moment. What we're seeing across our council-wide budgets, halfway down that table, is we've got an underspend there of nearly £1 million. That is detailed within the table. I think we'll call it table 2, where there are variances, more detailed updates around the variances for each service area. But in terms of council-wide budgets, 973,000 projected underspend. The areas that we're seeing there is, obviously we touched on the debt restructuring exercise we've done around the council's lowball loan. That has released money. We do recover, I think, under the item earlier around housing benefits and overpayments. We do recover and have got the ability to recover housing benefit overpayments. So that does give the authority income. So that does help us out. And also what we hold in our council-wide budgets, because our budget's significant, 164 million, we do hold contingencies. And as the year progresses, if we don't need to use those contingencies, we can release them back in, and that gives this credit position. In terms of the section on funding, that is quite static with the exception of one item around business rates. And we are seeing volatility on our business rates, and paragraph 12 gives some details around that. Trafford's business rate baseline is healthy, it's significant, but what we do see, we're quite exposed to changes to that baseline. And what we're seeing at the moment is a slight erosion in our rateable values. And there can be a multitude of reasons behind that. Why we've got a credit, though, is that as part of the business rate retention scheme, that we retain some of our business rates, and we're actually in a Greater Manchester retention pilot. Some of the monies that have gone to Greater Manchester as part of this pilot scheme have actually been returned to us recently. So we've been notified of a return of 3.3 million. We are taking a cautious view on some of these things, in that business rates is volatile, and we do tend to put business rates windfall into our budget support reserves and business rate support reserves, and we've taken a figure of 2.5 million out of that windfall to put into reserve. Just one other area within the report, and again we touched on it earlier, was around the airport dividend. The total dividends for the year received are in the region of 5.6 million, which was broadly £2 million in excess of the budget figure. We do budget cautiously on the basis we don't want to end up having to come back to the council with problems in this area. In terms of other issues within the report, just skipping through a couple of highlights. Section 5 of the report within table 3 just gives an update on our savings programme that was set at the start of the year. Just short of 10 million. Savings are forecast to be just in excess of that. So in terms of delivery of savings, we're slightly above target. In terms of the reserve section, which is on paragraphs 6, 7 and 8, this just summarises some of the movements to reserves that we've made as a result of the activity at period 8, that being the movement of £2 million to the airport reserve. Business rates, we've put another 2.5 million into reserve. And DSG, Dedicated Schools Grant, we did receive additional funding in December for 18-19 to cover high needs expenditure. So what we've done again is we've put that into reserve to cover high needs pressures, which again, these are pressures that are going one way at the moment. So again, a cautious view has been taken, and some monies have gone into reserve to try to protect our positions in the future on that. Just moving through the report very, very swiftly now. In terms of the collection fund, when I say collection fund, what I mean by that is what the collection fund is, in effect, where we put our revenues from council tax and business rates. And in terms of collection, council tax collection is slightly above target at 77.1% at the period 8 position compared to a target of 76.6%. The rest of the report from paragraph 21 deals with our capital programme, and it gives some idea of the overall size of our investment programme in our assets and on our capital investment fund where we're buying commercial property. Table 8 just gives an indication as to the levels of actual expenditure that we're likely to incur based on projects that are already being delivered and are on site or either completed, which indicates that the lion's share of our capital programme should be spent. In terms of the asset investment programme and the commercial properties, table 10 just gives an indication of the types of investments and the commitments we're making around from the £300 million fund that was created last year. So at the moment, allocations or commitments of £174 million out of that 300 have been made. That's not necessarily cash that's gone out of the door yet because we've not actually signed up to some of those deals and completed, but they're commitments that the investment management board have made. So basically, Chair, that summarises the report, hopefully.
Thanks, Rem. Any questions?
Thank you. I just wondered if we had any further detail from government on the, it's a pilot scheme, the business retention. Is there any long-term plans available to us?
I think when we got the pilot, the first year of the 100% pilot was 2018-19. We have got an announcement that will continue for 19-20. Then basically everything is up for grabs from 2021. We don't know whether the pilot will continue. Government have suggested local authorities will be able to retain 75% of their business rates. But we need to wait and see. What they've also promised though, and again, it's got an impact, it's quite a significant impact on the budget, is that they will reset all business rate baselines. So what that means is Trafford, when business rates retention first got introduced in 2013-14, they gave us a baseline and which said any business rates above that baseline you can retain, or you can retain 50% of them. In resetting the baseline, and we've grown beyond that baseline quite significantly and are using that to support budget. The concern we've got is with a reset, that baseline could well go up and any growth we've got could be taken away. And consultations are ongoing with the MHCLG at the moment to do with that. So it's a little bit unknown, but there are consultation options that we're considering at the moment.
It's always a frustrating situation in that if we do well as an authority, which is that an example of that, then we get penalised because we get higher bar to jump, which I don't agree with at all.
And I think the concerning thing is when you embark on schemes like this, the idea is that they're trying to give authorities autonomy and freedom and offer incentives. What we've got a concern about, we've grown, we've played the game, we've won, we've invested, we've developed our business rated baseline. That incentive could be eroded significantly, and that's a concern.
Yeah, I think it might be helpful sometime we have a presentation on that, because obviously things have changed in the last 4 or 5 years, haven't they, with pilot schemes and so on. So certainly I personally would find it very helpful now, particularly telling us there might be further changes, if we could have some presentation and paper to explain.
That'd be useful,
what you've just said.
The
really.
presentation would be good,
Yeah. Okay, are we, sorry.
Thank you, Chair. It was just to pick up on something that within this report about the staff underspend and of nearly £500,000. Is there any particular reason why we've underspent? Have we just had a very good year of retaining staff and not needed to do so many vacancies? Because £500,000 saving on a forecast seems to be quite a lot.
I think,
you know where I'm looking?
Historically,
page 99.
29.
99.
99.
The question was, I mean, obviously it's a huge saving, but whether there was a slightly different process that we did to advertise vacancies now, or do we have a different protocol?
I'm not aware there's a change. I do know we've historically had staff underspend and vacancy savings through restructures. I think in 2018-19 there were some quite hefty savings targets put in to in effect try to mop up some of those.
Sort of bottom line, it just seems to make up quite a lot of the bottom line. You mentioned 973,000. Well, if you look into the report, if 472,000 of it is this one item, this one line, it seems quite a big proportion of that. And therefore, you know, if there's a reason behind it, then perhaps we need to sort of, you know, highlight that more.
I think in terms of the trend in terms of staff vacancies, the underspends reported in this report are not as sizable as previous underspends on staffing. And I think our overall staffing budget is probably in excess of £50 million. So when you take that into context, every authority has staff turnover. So yeah. But there are a number of ups and downs within the report.
It's coming now, is it? I think there's been staff vacancies held because of central budget government cuts to the budget, isn't it? So when we've restructured, we've retained vacancies so that we can manage the cuts to the central budget, isn't it?
To some extent, and I think it is that, but I don't think it's a significant issue as it was in terms of staff savings. I think the concern is where we have got savings, the impact on other staff, and I think that is addressed across the council. But there are a number that saving within the Place Directorate is obviously part of the overall 1 point overspend on directorate budgets.
Well, on page 96, you talk about, you know, passenger transport, and you're saying that you've made staff savings in the budget there. You know, those are some of the lowest paid employees that we have within this council, and you know, so we are making savings against staff. And I think, you know, why are we needing to do that? And I think it's because central government budget has been slashed so much. So I think that needs to be quite clear that, you know, we aren't funded the way that we should be, and that's why we have to retain vacancies, and you know, so that we can pay for other services.
think politically I disagree with you, but you know,
Well, you would, wouldn't you?
because I think you're making a political point for an officer trying to explain the process. So
I understand what's happened to central government budgets. I understand that, you know, we've across the whole of the public sector, we've had to make cuts to services because
the officer to give an opinion.
I'm not asking him to give an opinion. You were asking him why there were vacancies. So there are vacancies because we don't get enough money from central government.
I think it's just worth pointing out we are working with a budget envelope that if we spent up to budget, we can fund that. So a saving on a staff budget wouldn't be related to the fact that we've not got the funding, because we've got the funding to pay for our budget.
Can I just ask for clarification? Top of page 99, where it talks about staff underspend from vacancies of 472k, which is 278 in excess of the savings target. I can't in my head take those two numbers away, but does it mean there've actually been more vacancies than we targeted?
No, what we did at the start of the year was we assigned. Historically, we've incurred staff savings from vacancies, and when we've set budgets historically in the last, I think we started in 18-19. We assigned, in effect, a directorate savings target to the Place Directorate and to the old Transformation and Resources Directorate, given that it had continually underspent predominantly on staffing. So what this was saying is there was a target to save, and we actually saved it. We've actually saved in excess of the target that we'd set ourselves.
When it says this was an adverse movement, 60k, does that mean? I know when you say adverse, I'm not quite sure.
The advert at period 6, that 472 would have been a little bit bigger.
Yeah. So there have been efforts to fill vacancies, but not entirely successful. Is that what it means?
Not entirely successful.
Yeah. Okay. Anything else? Thanks for that. Can we just ask to note that report, I think, for the executive, aren't we? Go on to item 12, which is the work programme, I think.
Okay, the final report just sets out the work the committee's covered to date, and also the agenda for the March meeting, which, as I referred to earlier, should include an update from staff, procurement, and an update on the cybersecurity risks, and the strategic risk register report will be coming to the next meeting too.
Okay, any queries about that? Yes, I think apart from urgent business, which I've not been informed of any, I think that's the end of the meeting. Thanks very much.
Thank you.
Yep.